Hi. So this video is going to be a very quick video explanation as to why a lot of borrowers or buyers of real estate think that they can't qualify for a mortgage. I wrote a few things down, but they are not inclusive. They're not all inclusive. There are actually hundreds of different reasons why a buyer might think they don't qualify for a mortgage. But first, I'll go into the credit score. So various lenders have different minimum credit scores, and I happen to be a broker. Nexa Mortgage is the largest broker in the country, and we are also the fastest growing mortgage broker in the country. And what that means is we have on our platform hundreds of different lenders that we could place a borrower's mortgage with. One of them, well, let me just back up. Each individual lender has what we call overlays, okay? So one lender might have a minimum credit score of 640 or 680, and another lender might have a minimum credit score of 500, okay? So another lender might have a minimum credit score of 620. So every lender, every wholesale lender that we work with, every wholesale division for every lender that we work with as a mortgage broker has different criteria for the loan for what is allowed at their institution before they will approve a mortgage, right? But that doesn't necessarily mean that you can't fit into any cookie cutter just because you won't fit into one. That is one of the key benefits of using a mortgage broker. We literally have the ability to place you with the lender that you do fit in, right? The cookie cutter that you do fit in with. The next one on the list is income taxes. Well, if you are a borrower with a W-2 income and you have received W-2s for 2 solid years, then we won't even need your tax returns. Okay, we won't even ask for them. If you're qualifying on W-2 income alone, we don't need your tax returns. If you are coming from a 1099 scenario to a W-2, all we need is 1 year of solid, stable W-2 income to qualify you on the income that you receive today. And we wouldn't necessarily have to average out the income from your tax return from when you were self-employed and receiving a 1099. So that is one of the, whatever beliefs that a borrower has, that if they came from a institution that or an employment situation, income situation where they were receiving 1099 income and then switched to W-2s, and they don't think they'd qualify because some lender told them they had to wait 2 years, that is just that lender. It's not all lenders. And that same rule applies across the board to every single thing I'm going to talk about on here, okay? Next is assets. Your bank statements. So some people believe that because they have one NSF check on their year-to-date bank statement, that would disqualify them from obtaining a mortgage approval. That is incorrect. The underwriters are literally looking for a consistency of that, right? So if you have one and done on one NSF thing that happened and you forgot to transfer money or something, we would just get a letter of explanation on that. But if you have multiple NSFs, please call me because there are tricks to the trade, okay? And only an experienced loan officer can help you guide you through those issues. And only an experienced loan officer would be able to know to ask the borrower specific questions looking for that information. So when I get on the phone with a borrower, I literally might ask 5 questions and the borrower has no idea why I'm asking. I know why I'm asking. You might not know why I'm asking. I'm asking because I want to place you into a specific category so I know which channel of lenders I could take you to. So there's a method to my madness. Another limiting belief that a borrower might have or a success blocker is that they feel that they don't have enough money for the down payment. Well, not only are there 100% financing loan options for you, there's also down payment assistance for you. And there's a gift. You can get a gift from a family member, an employer, or a very close friend. So let's talk about that. If you think that you need to have a 20% down payment, that is a lie. That is definitely a rumor that you heard on the street. You do not need 20% down to buy a house. A lot of cases, you can get a conventional loan with 3% down, and that 3% can be a gift. So that is just a matter of which loan program, which cookie cutter, and which lender you fall into, right? So allow a broker to use their resources and their portfolio of lenders and options and opportunities that we might have to fit you in the select category that you fit in, right? So mortgages are, it's important to know mortgages are not a one size fits all kind of deal. Every single borrower is different. Every buyer is different. Everybody has different needs, different assets, different criteria. Another limiting belief is collections. If you feel like you have collections or charge-offs on your credit report, an experienced loan officer and an experienced loan officer that has opportunities with different avenues, with different lenders, can help you with this. Okay, where one lender, like a bank, for example, will be like, no charge-offs, last 3 years, no exceptions, or no collections, no exceptions, right? And they might not tell you that that is their overlay, but that would be, they're just going to explain to you that I'm sorry, Mr. Borrower, we can't do your loan at this time because of the credit history. They're not necessarily going to tell you why your credit, that if you called so-and-so, I think I'm friends with her on Facebook, call Seanna Smallwood, she'll get you a loan. They're not going to point you in the direction of a competitor for the fear that your realtor might start using the competitor instead of them. So keep that in mind when you're dealing with a lender that may have told you that you couldn't buy a house right now. Okay. Collections and charge-offs, just a limiting belief. Another thing is that you simply don't believe that you can buy a house right now. You can't imagine it, so you don't believe it. That is a lie that your ego is telling yourself, because one of the number one things that I'm passionate about in my career is helping people get the keys to their new home that did not think it was possible to get. And so I'm that girl that's going to go the extra mile, that's going to go the extra 6 miles, 8 miles, 10 miles, 50 miles to make sure that if I can't get your mortgage done right now, be a very slim chance that I can't, but let's just say that I can't. If I can't get your mortgage done right now, I'm going to give you a map and tell you specifically what you need to do to qualify within 30 or 60 days. So this is June 1st, okay, that I recorded this video. Maybe if you would apply, SeannaSmallwood.com, fill out the application, let me look at your credit, and maybe by August, you will qualify for a house. But I won't know until I see your credit report. I won't know until I see your income and assets, okay? So let me do my job and avoid all the naysayers, avoid all the people that think they're in the business and they're not, avoid all the gossip. Everybody wants to be a real estate agent and everybody wants to be a mortgage loan officer. But guess what? Unless they are, they're not. All right. And even if they are, they might be with a retail lender instead of a broker, and only their specific rules apply. And that might not be your cookie cutter. Okay. So rumors, success blockages, and everything that we had discussed are the main reasons why a buyer or a borrower might feel like or be apprehensive about filling out an application. Credit scores, I mind you, change, like the algorithm changes daily, okay? You could literally, when I pull your credit, your score is going to drop 3 points from a hard pull from all 3 credit repositories. However, if you just made a $50 payment on your credit card that may not have posted yet, and that creditor has not reported it yet, you may end up with 20 points higher in 2 weeks, which don't affect me. It doesn't affect me at all because I'm going to use this credit report. If you qualify with the one that I pulled. However, the only time the 3-point drop matters to a borrower is if and only if you are borderlining whether or not you qualify at all. And if that is the case, I will do a wizard and I'll say, oh, if you pay down this Capital One credit card by $75, or I'll even be very specific, $78 payment on your Capital One credit card, give me the letter from Capital One. This is an example that states that you have the new balance is this. I will rescore you. And in 7 business days, I will have a brand new score for you. Okay. So the only time the credit drop matters is if you are borderlining whether or not you qualify for a mortgage right now at that very moment in time. The credit algorithm is continuous and it never stops. So please visit www.seannasmallwood.com. I'm going to put all of my information in below. And if you have any questions whatsoever, please give me a call, 240-695-2907. I look forward to helping you, and so does all of my team. Thank you. Have a great day.